born in University of Professional Studies, Accra, Dean slams Bank of Ghana's growing deficits as systemic failure, despite leadership's picture of hope.
The challenge we have is the fact that we are looking at the causes. That is important. Why are we in the situation where we find ourselves?
Meanwhile, finance and tax analyst defends Bank of Ghana's performance amid financial losses in 2025, arguing central bank achieved its price stability mandates.
At the end of 2025, the core mandate of the central bank has been achieved. But of course, we can't achieve this significant improvement in the fundamentals of the economy without incurring cost.
Plus, World Bank projects global commodity prices to rise 16% in 2026 since 2022, presenting a double-edged sword for Ghana. We've got all the details for you shortly. Stay with us. Dean of the Faculty of Accounting and Finance at the University of Professional Studies, Accra, UPSA, Professor Isaac Boedi, has raised a red flag over the Bank of Ghana's financial health, characterizing its current state as a result of systemic failure rather than external shocks. While acknowledging on business focus that central banks globally, including those in Europe, have historically recorded losses, Professor Boedi emphasized that the specific circumstances surrounding Ghana's Apex Bank are deeply concerning.
Early confusion over financial disclosure is not a minor issue and a leading indicator of a possible governance issue down the lane. So we don't take those issues lightly. There's a debate about profitability and credibility. If you give me two words here, I often will go in for credibility. There's nothing wrong for central bank to make a loss. It's happened before. Europe, Central Europe, and other banks. So It's not a news. But the challenge we have is the fact that we are looking at the causes. That is important. Why are we in the situation where we find ourselves? For the report we have gone through reviews three issues. However, directors will want to, the picture they want to paint, a picture of hope, a picture that things will get better. That's fine. But have a proper analysis of the report. It reviews systematic failures. It reviews a deteriorating balance sheet. And I see more a policy-induced losses.
That was Dean of the Faculty of Accounting and Finance at UPSA, Professor Isaac Boedi. Meanwhile, finance and tax analyst Nelson Kujo Kwabeji has stepped forward to offer a nuanced perspective on the Bank of Ghana's recent financial performance, arguing that a central bank's success should be measured by its legal mandate rather than its balance sheets alone. Speaking on business focus, Mr. Kwabeji posed critical questions regarding the Apex Bank's effectiveness at the close of 2025. He emphasized that the primary objective of any central bank is to maintain price stability and ensure the smooth transition of policy rates into the broader markets.
We cannot assess the performance of a central bank from its balance sheet, but rather we must assess the performance of a central bank based on the mandate that is given by law. How did we move from a fragile, weak economy to an economy that is stable, that is ready to take off for growth, and that is inspiring confidence in terms of consumer confidence, in terms of business confidence, and even in terms of investor confidence? What did the Bank of Ghana do? Number one, Bank of Ghana maintained a tight monetary policy stand throughout 2025. And so the policy rate was taken from 28%, and we ended the year by 18%. So there was a direct transmission of policy rate into market rate. We also saw the strengthening of the banking sector. The banking sector became more liquid. The strengthening of the buffers as a result of the gold export and all that, which tells you that at the end of 2025, the core mandate of the central bank has been achieved. But of course, we can't achieve this significant, improvement in the fundamentals of the economy without incurring cost. But it is to the benefit of the general economy.
Finance and tax analyst Nelson Kujo Kwabeji speaking there. The chairman of the National Development Planning Commission, NDPC, Dr. Nimoy Thompson, has signaled a fundamental shift in the nation's policy-making framework, calling for a reorientation of monetary policy to place employment at its core. Speaking on the urgent need for enhanced developmental data, Dr. Thompson revealed that Ghana currently faces a serious deficit in analytical capacity regarding labor issues.
As a nation, we have serious deficits in analytical capacity in certain key areas, especially when it comes to labor issues. So the Commission, we are training a group of 14 or 15 different people, including a representative from the Bank of Ghana, from the Ministry of Finance, from 6 metros, Labor Ministry and so forth. We are training them in labor economics for us to gain a policy-relevant perspective on understanding of labor issues, which we currently have, but to a very, very limited in scope. So we're actually working with the ILO in Italy to train this core of people that will then put into the system, so that when it comes to making policy, and this is where the issue of reorienting monetary policy comes in. This is the technical part. After that, we now shift to the policy part, where we want policymakers to think about nothing but employment, employment, employment.
A new report from the World Bank warns that global commodity prices are projected to rise by 16% in 2026, marking the first annual increase in 4 years. The surge is driven primarily by the conflict in the Middle East, which has severely disrupted energy, fertilizer, and metal supply chains. There's more in the following 3 Business News Desk reports.
The baseline outlook hinges on continued disruptions in the Strait of Hormuz. Energy prices are expected to jump 24%, while fertilizers could soar by 31%. Brent crude, which averaged $64 in late 2025, skyrocketed to $118 per barrel in March 2026, the largest monthly increase on record, before stabilizing near $86 following a tentative April ceasefire. It is now around $114.69 per barrel. While energy dominates headlines, industrial and precious metals are also peaking. Precious metals are projected to surge 42% to record annual highs due to safe haven demand. Industrial metals are expected to rise 17%, led by a 22% jump in aluminium prices as regional production is squeezed. In a rare piece of relief, the agriculture index is projected to fall by 6%, while food prices remain under pressure from high transport and fertilizer costs. A 30% crash in beverage prices, cocoa and coffee is expected to offset those gains as previous supply crunches ease. The World Bank has downgraded growth forecasts for emerging markets from 4% to 3.6%, while inflation projections have been hiked to 5.1%. Experts warn that if oil remains above $100, an additional 45 million people could face acute food insecurity globally. As an exporter of gold and oil, but a heavy importer of refined fuel and fertilizers, Ghana will experience both windfall revenues and significant cost of living pressures.
Let's take a look at how the cedi is faring against major trading currencies and how some of key commodities are also faring on the global market.
On the interbank foreign exchange markets, the dollar is selling at 11 cedis 23 pesos. It's gained 4 pesos. The British pound is selling at 15 cedis 18 pesos. It lost 2 pesos. The euro is selling at 13 cedis 12 pesos. It also lost 1 peso. However, be guided that these figures could be higher as a forex bureau near you. On the global commodities market, Brent crude is trading at $106.07 per barrel. Gold is trading at $4,513.56 per ounce, down by $3,100.65. Cocoa is trading at $3,883 per ton, up by $287.
That'll be all for business news on Sunrise. For more business stories, please check out our website, 3news.com. My name is Christabel Success Treve. Sunrise continues. Stay tuned.